This is Mark Anthony with Mercury Time Price Analytics. Welcome to our end of day video for traders of the S&P futures, the E-mini contract or the micro contract. Very interesting setup. This video is being recorded at 7:11 Eastern Time on July 8th. Now what you see on the screen, and we're going to come back to this big picture chart. What you see on the screen, these fixed horizontal lines, are fixed algorithmic pivots, and the angled lines, you see the angled line here, the purple, and these two dotted angled lines, those are algorithmic regression lines. And what regression lines are is a combination of the formula that creates these fixed horizontal points and the time mechanics that are derived from our proprietary oscillators. So we're going to come back to this big picture chart, but I want to deconstruct this a little bit just to put in perspective what an important juncture and an important decision-making point that the S&P futures are at right now. So I've got a few screenshots already prepared. Now what you see on this screen are the algorithmic oscillators. This screenshot was taken today at a little after 1 o'clock Eastern Time. And the oscillators are based on various algorithmic time cycles. The institutional algorithms are very highly time cycle based. And what these oscillators do on the screen is they show you these different time cycles in a living, breathing format that weaves up and down, in and out through the chart, as opposed to the fixed horizontal points you saw in the previous chart. And so the oscillators move at varying speeds. The faster the oscillator, the more movement. And so the fastest oscillator on this screen is this dashed white line. And then getting progressively longer, you've got the solid white line, the dotted white line, and then continuing from fastest to the slowest, meaning a longer cycle. After these white ones, you have this dashed orange one, this purple dotted one, and this longer dashed orange one. Now, the reason I'm showing you this chart is you see the oscillators when they come in yesterday. Very wide spacing. Now you can see as of 1 o'clock this afternoon what I call an algorithmic cluster, where these time cycles have all moved together. Now you don't have to have an algorithmic cluster like this to have a key market turning point. There's plenty of things that'll make the market turn. News events, geopolitical events, Fed meetings, earnings. So you don't have to have this type of algorithmic compression to have a large move up or down or an important intermediate change of trend. However, when you have these types of compression, it is very likely that you're going to get a strong directional move, either up and through or down and through. And what's really interesting about what we saw today is you had a move down to the longest, meaning slowest oscillator, a move back up into the confluence of these two oscillators, and then you came down and broke this oscillator. You came back up and broke this one on the high side. Then you came down again and broke it. We had the daily high up at 3162, and then we had a plunge in the opposite direction, down and through to about 3125.26, and another move back up in here, a lower high, and then you'll see on the next chart a higher low. This chart was taken about an hour after the one we just looked at. And this one is zoomed in, so it doesn't look quite as compressed. but these are the same oscillators. We just zoomed in on them. Now, here's what's really interesting about this. You may be familiar with what's called a megaphone pattern. And a megaphone pattern is simply an expanding volatility pattern. So if you start from here, you can see the volatility expanding with higher highs and lower lows. And more or less, what an expanding volatility pattern tells you is indecision, market confusion. Where these patterns get dangerous is when, after you have the megaphone pattern of expanding volatility, you get contracting volatility. So let's look at the chart taken about an hour after that. And you can see that now we're getting things compressed. So then what you have is a megaphone pattern and then the opposite. So essentially it's a megaphone pattern and then a contracting volatility pattern on the other end. So it's in the shape of a diamond. And let's go over here to a live chart. We'll zoom this out a little bit. And you can see it a little bit better here. Expanding volatility, and then here we have the contracting volatility with that breakout. Now, quite often, you'll get a move out of a diamond formation that essentially ends up being a head fake, misdirection. Now this could certainly go higher up into, we're already up into this regression line here, could certainly go higher up into this regression line and retest the high from yesterday up here at 3184. But this could also be a fake out move, and we won't know that until we see what develops tonight and tomorrow. But I wanted to point out this compression in the algorithms, because you get out of these cluster formations, you get strong directional moves. What's out of the ordinary with this one is, as the oscillators compress, how many moves we've gotten outside of the upper and lower band. 1, 2, 3, 4, 5. Now, if you don't make a new high, and this segues into another point that I didn't intend to talk about, but it's important. When you get an expanding volatility pattern and you get 1, 2, 3, 4, 5, and then this last point doesn't come up and make a new high, that last spot where it reverses, that's a short entry. And typically it's going to break down below. Now, again, this could break either way, but I wanted to show you how confused the market is, because the very essence of these algorithmic clusters, when we see all of these oscillators start to compress down to a point, it means you're going to get a strong directional move. The problem right now is the market doesn't know what direction it wants to move out of. We've seen a substantial dislocation between the NASDAQ tech stocks, Apple, Amazon, Microsoft, Facebook, Google, versus the banks. The bank stocks are not acting well. And that may change by the end of the week as we go into bank earnings next week. But one of the things that's concerned me the last several days is the poor action in the banks. A couple of days last week, we saw them open on the highs, close on the lows. They just have not been acting well. So that's something else to keep in the back of your mind. Some key points to keep in mind over the next couple of days. Let's go to the next chart. Now, this shows you the regression lines zoomed in a little bit. But I also want to point out a very important fixed algorithm, which is called the XSV2 algorithm. You've got, let's see, let me go back here to the live chart. You've got an XSV2 algo here at 31.67. And I labeled the date that algorithmic bull bear pivot was generated from. This was from June 5th. Then you have this one down here at 54.50. Now this is the important one, extremely important, because this goes all the way back to November 27th of last year. This level at 31.54 is monumentally important to which direction this pattern resolves itself. And you saw today, late afternoon, you had that move up, and once you got over 54, it ran. And then you've got an XSV2 pivot down here at 31.45. This one was from June 16th. So these are all very, very important levels. And there's one other one I want to call to your attention. This XSV2 pivot up here at 31.84, that was literally to the tick the Globex high on Monday evening. And that one goes back to June 5th. So these are very important fixed algorithmic pivots where the algorithmic pivot was created on the day that's shown. And if you go on our Twitter feed, you'll see those. Search for Mark Anthony or MC2085. That's MC2085. And you'll see these charts. I posted these XSV2 pivots last Thursday. And since that time, they've been incredibly important. We can also see how price is in a channel between these algo regression lines. In fact, the low today came right at the confluence of this algo regression line and also our tick reflex pivot. Now, these pivots that are labeled here that have the funky names like tick reflex pivot, multi-day long cycle, back test pivot, tick point of control long cycle pivot, trend confirmation pivot. On our charts, the ones that have these very descriptive funky names, those are generated in the morning before the market opens. They're generated about an hour and a half before the market opens. And their name is derived by the fact that when we run the algo in the morning, it not only gives us the pivot levels, but it ascribes a particular characteristic or personality to that pivot level. And the behavior when price gets to that pivot level corresponds to that particular name or particular behavior. So here you have a tick's reflex pivot. Well, as you would imagine, a reflex pivot tends to cause price to revert back in the direction from which it came. And you see this 2 a.m. in the pre-market. And these algorithms, all of our algorithms are derived from a formula. We don't look at the chart and say, all right, well, this is a support level, this is a resistance level. All of these are mathematical algos. But I thought it was interesting that we had today's low at the confluence of the tick reflex pivot here at 31.26, which it literally hit to the tick, and this regression line. Now, I also want to point out our daily bull bear pivot. We've got a number of different trading systems that you can use, whether your style is to quickly trade in and out, whether your style is more patient, looking for potentially bigger day trade moves, or if you're a swing trader and you're looking for those larger multi-day moves. We have so many different algorithms. There's algos to suit any style, but one of the simplest, most effective tools we have is our proprietary single daily bull bear pivot. Now, as with our other algorithms, they are produced before the market opens. These are not generated during the day. They're provided to our members ahead of time. And the single most important trading level to know every single day is our daily bull bear pivot. If you go to our website, mercurysignals.com, you'll see the prescription rates and all the different things that you get. If we gave you nothing but this, it would be worth its weight in gold. because the simplest trading system I can give you is to use this daily algo bull bear pivot and simply be long above and short below. So you can see the time down here. This is Eastern time. These algos, the daily bull bear pivot, it's calculated more than an hour and a half before the market opens. So it's calculated prior to 8 a.m. And you can see right off the open, you had a move up and through the daily bull bear pivot, 18 handle move up. Even if you're trading micros, that's a nice move. And then at 11 a.m., the futures came down and through the daily bull bear pivot, and that was a similar move, 18 handles. So 18 handles on a long trade, 18 handles on a short trade, triggered by price movement up and through in this case, down and through in this case. And then late in the day, one of the best trading strategies that you could possibly have is when you get a late day move through the daily bull bear pivot, you will almost always get a nice, strong, in many cases, fast move. And this last move started down here at the backtest pivot. I mean, how's that for accuracy? This is the daily backtest pivot. This move this afternoon found support twice, almost to the tick at that level, at 31.34, 34. And by the way, the algorithms are decimalized to 2 digits. I know the futures don't trade 34 cents. But you had that move right down to it. When you came back up here, as it crossed up through the daily bull bear pivot, you had a 22 handle move into the close. What we get this evening, who knows? But this is a very simple, very, very effective strategy. And I want to leave you with this, going back to the algo regression lines. Again, anything that you see on our charts that is an angled vector as opposed to a horizontal line, these are algo regression lines, purple line, purple line, purple line. But then you have these two dashed white lines. And you can see they come to a point right in here at about 48. And just looking at the chart, you can see how important that level is. Up and through, down, recovered, down and through. So where these 2 points come together, rest assured that this is going to be an important level between 45 and 52 tomorrow. And if we see this in Globex, equally more important. So if you'd like to take a look at our systems and our subscription rates, just go to mercurysignals.com. Just type in mercurysignals.com. That'll take you to our website. You can see the features and benefits. You can see our previous market reports. I don't do those every week, every couple of weeks, or whenever there's something particularly important on the weekend. And just click on the subscription rates and you'll find out all about our rates. And that is at mercurysignals.com. So with that, we thank you so much for tuning into the video. Tune in for tomorrow's video, because what we're going to do tomorrow is I'm going to give you a look at what we call the matrix pivot. This is simply like the daily bull bear pivot, but in real time, moving up and down. And we'll talk about this tomorrow, as well as our intermediate cycle matrix pivot. And with that, we thank you so much for viewing our video tonight, and we look forward to seeing you tomorrow. God bless you. God bless your family. We hope to see you again tomorrow.